All right, we're live with Kevin Green. This is the commodity report. Where we go through all the commodities and what they're doing, and what they have been doing lately is a lot of pullbacks, a lot of pain in the commodity markets lately. A couple things have started to bottom, though. If we look at crude oil started to bottom at the beginning of June, started to move back up, went from got all the way down to $72, and now it's back to 78, 76 today. So crude oil is starting to catch a little bit of a bid off that bottom. Gasoline, more sideways than up, but heating oil, Kevin talked about it getting below that 200-week moving average. We wanted to see it try to reclaim some certain levels, start to see some momentum behind it. Now heating oil went all the way from $2.25. Now it's up to $2.50 actually today. So heating oil is trying to catch a little bit of a bid. Natural gas, just doing what natural gas does. It's still in an uptrend. However, it's pulled back pretty hard. Normal natural gas movement, pull back hard, rise again. That's what you get when you trade natural gas. Just be ready for it. And if we look over the performance over the last, let's look over the last month. We have cocoa in first place again. Cocoa trying to catch a catch-up rally off of those lows. So cocoa basically came down, got stuck in this range. It's been moving up and down almost 6% today. Once again, commodities can be very volatile at times. So now we're seeing a lot of volatility in the cocoa market at this moment. So cocoa's up 5%, down 5%. Be ready for that volatility if you're going to be trading that. Right now we're out. Our position is neutral on cocoa. Coffee's right behind that, up almost 10%. Coffee's looked pretty good, but it's kind of stuck in a range at the moment. We'll see where it really ends up. Resolving higher would mean it get over that 230 level. We haven't seen it getting over that just yet. I'd love to see a close above 235 to really get bullish again. We are still long coffee. Orange juice had a pullback, and that's also giving a short-term buy signal today. And what I mean by that is when we have trends that are moving up strongly and they pull back and they get back above a 10 EMA, this is the point where you can start getting some momentum behind it and try to buy something. You never want to buy a commodity when it's straight in a downtrend, so you wait for a little bit of momentum. You could try to swing at it here, but once again, use your systems, use your strategies. Just saying, what we do. What I do personally, at least. And then getting to sugar. Sugar is really trying to come off those lows. That could be an interesting one watching forward. I keep watching that. I see a lot of commercial buying, a lot of short interest kind of moving up in the speculators and even the small traders at the moment. So it's kind of interesting looking at those. So going back to the performance, so sugar is actually right behind that at 5%, up 5% in the last month. Live cattle up 2%. Everything else, for the most part, has been flat to down. Heating oil flat, crude oil flat, but what flat means to me is down 1% or up 1%. So they're both flat. And then if we keep moving down, you see at the bottom we got oats down 13% in the last month, palladium down 13% in the last month, copper down 12% in the last month. Wheat down 8% in the last month. So a lot of movement in the commodities market, not the direction we wanted to see, for me at least, not Kevin. Kevin was actually calling it well. Kevin calls the short-term trading angles very well. For me, I'm kind of still looking at this as moving higher in the long run on a lot of these. But at the moment, we're neutral on a lot of positions, and a lot of positions some positions have even gone short. So what are you seeing out here, Kevin? What are you thinking about this commodity action lately?
Yeah, I would say we're in a churn market right now, Jason, when you're looking at the commodities. And I think each type of basket, if you're looking at energy, if you're looking at metals, or if you're looking at grains, kind of set up something a little bit different. And that's like a change from what we saw, let's say, a month and a half ago, right? Where we saw pretty much all the commodities across the board catching a little bit of a bid. Now you kind of have to, like we talk about, you got to pick your stocks. You got to kind of pick the commodities that you really want to go long or the ones that you want to go short. It's not just a long game. It's a short game as well, depending on kind of how you play it. Let's look at some of the interesting ones that I'm kind of looking at for this week here. Let's talk about cocoa real quick. Yeah, let's talk about cocoa real quick, because you talked about a little bit of a bounce to the upside, right? When it comes to a little maybe some of the price action here. Now, the Ivory Coast actually did halt forward sales for the 2024-2025 crop season, which is huge, right? That kind of shows the lack of supply that's in the market, and they don't want to have this double ordering type of scenario occurring. And then we have this huge ramp up that also can be supportive for prices to the upside. So just kind of be mindful of that. So they're kind of they are definitely focusing on those farmers that have been hoarding and trying to get those supplies to the market. But once again, they don't want to have this kind of FOMO feeling. If you're talking about cocoa, you don't have that FOMO feeling. So I don't know from a price action standpoint where it goes from here, but I would say that you have more support to the upside right now, just based on the Ivory Coast and what actions they're taking, rather than maybe downside risk at this point in time. And that actually probably could persist for a fairly long time. So that's what I'm kind of looking at when it comes to cocoa. Let's talk about gasoline. Let's talk about heating oil. So heating oil is catching a bid. I did send you a chart. We could kind of go through a couple of these charts here real quick. Heating oil is showing some bright upside here. We just have to kind of be mindful because there's a key area of resistance at that 200-week moving average, which is what I continue to harp on. I mean, heating oil for the most part has been under the 200-week moving average, darn near probably a month now, or actually almost 2 months now. And that's not a really good sign from an economy type of standpoint, but we have seen some buying activity hitting at around that 225, 230-ish area, and you can kind of see that. The other reason why I'm kind of calling this out, stochastics. Some people hate it, especially when you're looking at short-term time frames. Very volatile, a high frequency. It can give you a lot of false signals. But when you're looking at a weekly chart, I think the stochastics does a really good job at trying to call tops and or maybe short-term bottoms. And I think that's what we are seeing right now, where that fast-moving average is moving above the slower-moving average. That is a bullish signal. And the MACD, which I know might be a little bit difficult to see, but the MACD is trying its best to be able to cross here. It does appear like we do have some support at that range. Once again, I would say 215 to 230-ish. And let's see if we get a pop up to 262. And if we can break through 262, then that would be a benefit to the upside here. But when you're looking at the energy market, we still see a fair amount of inventory being built up across the board when you're looking at crude oil. And you're looking at gasoline inventories, and even when you're looking at distillates. But if we were to catch a bid, guys, just keep in mind the distillates probably are going to be the first ones to tell you that because they were the first ones to kind of see a significant buildup earlier in the year. And now if you're kind of looking at that rate of change of the buildup going in over, let's say for the last 3 weeks, 4 weeks, it's starting to slow. So the distillates, the heating oil, the diesel, those are starting to get neglected a little bit. And these refiners are really focusing on gasoline, which is obviously why we've seen this rapid buildup in gasoline inventories. But if we were to see a shift in that type of production, heating oil and diesel should be the first ones to see it. We will also have a seasonal type of trade that does go into effect. Let's say, and I look at the trade in September or October, most likely September rather than October, but then you'll have the seasonal period where heating oil should outperform here. And then this chart here, U.S. gasoline demand, this is the 4-week average. So when you're kind of looking at that chart, what does this really mean? We have the orange line at the bottom. You saw that dip that we had in August. I have these on weeks timeframes, but that was basically August where we kind of diverted from the trend from last year's trend, which is in 2023, which is that blue line. And then we have the 4-year average of the 4-week moving average for US gasoline demand in red there. Now kind of notice we are starting to converge here, but we are still weaker than what we saw for last year. We're still weaker than what we've seen for the last 4 years. And Jason, here's the reason why it's a little concerning, because that 4-year moving average also includes 2020 COVID, right? It's starting to roll off here a little bit, but if we didn't have COVID, we would be at substantially lower levels. We would have a substantial, divergence here. So once again, a green shoot, if you're looking at trend, not good when you're looking at the immediate buildup in inventory, but we are on the oil front, continue to bounce off that 200-week moving average. We talked about these tactical trades. If you hit it, maybe you get in, scalp $1, which is $1,000 per contract. Maybe you sell it off, see if it hits the 200-week again, boom, kind of do that trade until we see a definitive trend to either the upside or a downside break. What do you think?
No, that's awesome. And I wanted to also bring up a couple charts that you brought up and something kind of interesting because I saw this, but I didn't also say this in the last report because you mentioned the seasonal trends in gasoline and heating oil and how they kind of flip at certain points. And so when we bring this first chart up, this is RBOB, which is gasoline, the futures contract. So you'll see that it actually has substantially it's not the weakest month that we see for gasoline, but it's weaker. And then when we go to heating oil, we see that this month is actually the best month in the last 20 years for heating oil, which is why we usually do see some outperformance around this time of the year. So it makes a lot of sense to kind of see heating oil catch a bit of a bid, gasoline kind of trying to play catch up. But once again, it's just like Kevin said, we're watching levels, we're paying attention to what it's running into. We're going back to, Kevin's, was this your first chart, which is heating oil? Look at that 200-week moving average, see where that's at, see what type of resistance we're going to run into at that area. If it blows right through that resistance zone and we get above those moving averages, then it's clear skies ahead. But at the moment, there's a lot of resistance levels. And what Kevin and I have brought up a bunch of times lately is like, even though some of these trades look good here, and so even though it makes sense that some of these would pick up, we're not seeing what we would want to see to finally say, hey, like, let's get long all these things are going up. At the moment, there's a lot of resistance. There's a lot of fundamentals that are kind of working against it, but there's a setup there. And I think that's a thing that we kind of keep having to pay attention to is here's a setup here for me. When we get over these levels, start to get more buy signals, I would be much more bullish on the sector. But right now, I just pay attention to these charts, pay attention to these levels. I like the crossovers that we're seeing on the MACD and so on. Like these are starting to look constructive. So at the moment, energy is starting to look a little bit more constructive. We're starting to see these bottom out. We're in a good seasonal time to see these things start to move higher. So I think it's a good thing to just continue to pay attention to here.
Yeah, I agree. Let's talk about. I sent so many charts, man. You want to hit? What do you want to hit next? You want to hit silver?
Yes. Yeah, let's hit silver next,
and then we could hit the greens too, because I think the greens are kind of an interesting setup. So we all know what happened with the run up when it comes to silver. Seeing it kind of flag out right now from a technical standpoint, it's just something to be mindful of. Doesn't mean that we would have an immediate pullback after. I mean, Jason, flag for the most part, it's been happening for what, the last 3 weeks, 4 weeks?
Yeah,
and it's been holding up. The more that a flag can hold up, the more that it also kind of signals that maybe we do have some buyers stepping into this market here. And we're continuing to see some of the area of support. I have the area of support when it comes to silver sitting at, of course, I can't get my chart up. I have support, the immediate support sitting at, let's say, 29.50-ish, 29.25. That's that red line. And then from there, kind of looking at 27.75-ish, right? But the chart has not broken down as aggressively as a copper, right? So we still kind of have a lot of flows right now, kind of sticky flows. I think speculators for the most part may have gotten washed out. We are still seeing on a week over week basis long positions being liquidated, so that does provide a little bit of downside pressure. But the biggest concern that I have here when you're looking at the technicals for silver is going to be the bottom of this chart. Stochastics kind of showing that cross, that bear cross, short-term moving average, moving below the long-term moving average, which is bearish. And if you kind of go back, silver does respect, or has in the past, respect that stochastic cross, those deep crosses to the upside or those deep crosses to the downside. So that's overall bearish right now. RSI kind of cooling off a little bit, but we do not have a bearish divergence. We don't have a bearish divergence yet, or an aggressive bearish divergence. And the only other thing that I'm looking out for is that MACD. I would say still the technical setup for me when it comes to silver does still signify some downside price action, kind of hitting to that 27.25, 27.30 area. And if we did test that and kind of move back to the upside, I think that would be ultimately bullish, to say the least. And let's see if the contract kind of comes back into its technical formation here. But bearish technicals, but once again, caveat to that, a little bit surprised that we've held up better than what I would have expected, because there was a lot of speculative and FOMO moves to the upside when it comes to positioning for silver, and it just hasn't flown out as aggressively as I would say. And I mean, it's still a significant move. 32.75 down to 29.5, still a significant move. But I thought it would be a little bit more aggressive trying to hit that 28 level, and just hasn't been able to do so. What do you think?
No, I'm looking at the same things as you. I see these charts and I see the same thing we've been talking about. We started to get to, this move getting a little bit long in the tooth. You saw so many speculators coming in, just trying to get into this move, trying to catch it, doing their own form of a catch-up trade. If we go back to the silver chart and we kind of just look at the commercials, I mean, they really haven't come off a bit yet. They're starting to come off a little bit harder than we've seen lately, but it's still not something that I would go, hey, this looks good. This is really constructive here. However, something to keep in mind, when you do trade silver or any type of commodity, most of the time, if something's really going to trend, you're going to see that the commercials are not going to continue to buy in the middle of that trend. So this can happen, but once again, we're pulling back here. I would like to see a little bit more commercial buying. We're not seeing the amount of commercial buying, or the producers aren't buying to the levels that I would really like to see. However, the position is still long. If you're a position trader like me, or a long-term swing trader, we're still in a nice uptrend. We're making higher highs, higher lows. We're chopping sideways at certain points, ready to move higher. I have no reason to really be super concerned about silver here. It just continues to pull back, makes nice retracements, good levels. It's respecting those. The only thing I could say is the positioning isn't very favorable to me, but it doesn't look as terrible as it did. But then if I look at it, just all of the other reasons that silver could start moving up, like real yields and the rest of the macro landscape, I could also say that silver could also catch a bid here. There's no reason that it couldn't just move up here. I would really, to be more constructive on silver, if I didn't already have a position, I would really want to see it close above that $30 level. If we started to see it close above that $30 level, you could maybe take a swing at it for a short-term trade. But for now, I'm really not seeing any reasons to just buy it just yet if you don't have a position. So wait for some momentum behind that move. Or wait for it to pull back more. Maybe we see more commercial buying, maybe we see more producer buying, and maybe we see a little bit more reasons why it could move even higher.
Yeah, and it's I'm trying to think like what can be the catalyst for silver to continue to move to the upside, and it's just a little bit difficult. Everything that we've talked about over the last 4 months has kind of already baked into the cake here for the silver move. And sometimes you follow the trends until the trend breaks, but sometimes when you're kind of losing those catalysts, it's always like that's that cautionary area, right, where you're saying, okay, like let's figure this one out real quick.
Yes.
Let's just hold off. Maybe don't get too aggressive on the upside here until we have that catalyst. Now, what could that catalyst be? Industrial production numbers coming out of China? Yeah, maybe. Could it be Japan? Could it be the United States? Even though kind of we're seeing maybe a little bit of weakening when it comes to the manufacturing sector here. What can be that next catalyst moving forward? It could be yields. But I mean, yields are just on its own, man. Like the yield market right now it's so volatile. I mean, the 10-year treasury is up 7 bips today already, 7.5 bips. I mean, that's not normal. And I continue to talk about that. It's not normal. We talked about this on Friday. I don't know how much lower it could have went, and maybe it still can go lower here in the near term. But in my opinion, it kind of seems a little bit overbought at this point in time. Now, what can drive up yields? Inflationary data that kind of shows that we might have some continued stickiness or maybe reflation coming back into the market. We already had some inflationary prints, so we got like maybe another month until we see that. Maybe we see that out of the PMI data that we'll get on Friday, maybe. But I just find it very hard to see what else can drive that silver move from a fundamental standpoint. And same thing with gold. Gold's down almost 0.6% in today's session. Not hating on gold. Gold had a really good run, but it seems like it may have found its new range for right now. until we get something else that can move it. And that new range, in my opinion, kind of looks like 2150 up to let's say 2500. Now you're going to be like, Kev, that's a very large range, 400. Yeah, gold does that. gold moves up, and then it finds this new range. It'll range out for a year, 2 years, 3 years until it needs another catalyst, and that's when it's going to re-rate either to the upside or downside. And so it's a very healthy range if you're trying to see if the technicals are going to come back align here. But once again, I find it very hard to find that technical case for gold. Are central banks buying gold? Yes, we know that, right? China actually stopped buying gold last month. I think it's probably due to the price of gold, probably. So you have a headwind there. How much can you advance in price in order for the physical market to continue to buy, to continue to see strong demand? At some point in time, you're going to reach a level where they say, you know what, we're going to hold off for now. We can buy something else. We can buy silver, or we can buy something else, treasuries, or we can buy dollars or whatever, right? So it makes it very hard. And then the copper move, we talked about this on Friday too. I feel like the 420. I'm looking at 420, man. But I'm looking for 420. I wouldn't say by the end of this week, but I feel like in the next week and a half, 2 weeks, 420 will hit. We're not catching the bids. The candles don't look great. You know, we had advanced. Yeah, if you look at the weekly candle from last week, we advanced, and then we basically sold that whole advance, and now we reversed lower and testing the lows from last week at around $4.44. Just doesn't seem like we're catching any bidders. And if you don't have the industrial side, if we have a weakness, quote unquote weakness, hard for copper. Copper thrives on expansionary markets. It thrives on expansionary industrial production type of markets or style markets, and that just hasn't been the narrative as of the last couple of weeks here. And we had some speculative flows kind of getting out of that. I feel like they're washing out here. But once again, I'm trying to think about what's the new fundamental catalyst, knowing that we're having supply hit the market right now, as far as physical iron, physical copper ore. What else out there can drive this up outside of some shocking data? And I think all this rests with China, man. I mean, everything else seems to be baked in when it comes to the U.S. I think it's going to be China. So that's what I'm kind of looking at when it comes to the metals complex. What do you think?
No, I like that because for me, I'm still long copper. It's very close to having the exit signal. It's very, very close, ridiculously close, actually. And when we look at copper, there's so many different aspects of it. One being, copper to gold ratio is a very simple way of looking at it. Copper basically yields moving up, growth moving up in the world, inflation moving up. If you have that reflation environment, that's where copper moves. I guess the hard thing for me to understand would be, why would copper make this move now? Why did it make that move? There's a lot of reasons. We could come up with a lot of reasons, but mainly my point isn't the fundamentals, which I already know. It's the fact that most of the time when copper makes a big move like that, a lot of things tend to follow. And seeing that it's made this big move and then it's coming right back is either the market getting too ahead of itself, which is very possible. Yeah. Market may have got too ahead of itself, thought we were, had this beautiful economic environment. It's just not there. It's not supporting it. Like Kevin just mentioned earlier, the manufacturing isn't there. The things that we've looked at, like we're bottoming at the beginning of this year, have started to change a bit. And so that's something that is weighing heavily on copper at the moment. But I do think that the one thing we have to really pay attention to here, and this is weird because I can't tell you how many times in trading I've said, because everybody knows people call copper Dr. Copper, meaning when you look at the world and global economy, copper kind of tells you what's going on. Yeah. But all these years I've been trading, at least, and since 2008, that hasn't exactly been the case. Sure, at the beginning of my trading, copper was one of the main drivers of everything. But as the years have gone on, that's changed quite a bit. So now what I'm saying is it's time again to be paying attention to copper. It's going to give us that signal. If it breaks down here, hits that 420 level like Kevin's thinking, that's going to tell us something. If it starts to bottom out here, let's say it right now, it starts to catch a bid. It bounces because it made a new low. For me, when I see something that makes a new low, and then reverses, that's when I get the most excited about a trade. For example, if you think of 2022 October, the bottom, you have the CPI report in October 2022. Basically, you know, everybody at that point thinks the market's dead. If another inflationary report comes out, that's the end of everything. An inflationary report comes out and the market ends up reversing higher because there was really no one left to sell. Everybody was bearish at that point.
Yeah.
You kind of see that positioning get lopsided when you see those type of candles made. So I'd really look forward to this week. This is the only way I would still say bullish on copper. If this week it comes down to this point and it retraces and moves higher immediately and closes above 450, then I would go copper still has possibly some upside. If it moves down or even closes around this point, I would be very bearish on copper going forward. So, you know, and the rest of the complex, gold, you know, I think the same way as you. I was thinking, you mentioned the range, and I was like, yeah, think about all of the ranges gold has been in over the years. You know, it was from 1380 all the way down to 1123. You know, that was one for that was it was in that range from 2016 all the way till it broke out in 2019. So, and I think that was May, if I remember right. So basically, you know, you have this massive range that happened back then. Then it gets into in 2020 all the way till recently, we had the range of 2000, basically 2100 all the way down to 1600. You know, gold makes these, like Kevin said, gold makes these huge ranges. So once again, it's the reason why we map stuff out like this, at least for me. What I think about mapping stuff out like this is going like, hey, if we start to really chop around this massive range, let's say from here, 2450 all the way down to, let's say 2100. If we start to carve out that massive range, that's a bad sign. That's a sign that like, you might want to range trade gold. You might want to become a different trader for gold, but trend wise, it's dead. But if we hold these levels, like Kevin mentioned earlier, you know, silver, the one thing that's kind of interesting is that silver is holding that level. And so is gold. Gold is holding that level, even better than silver, really, if you take a look at it. Yeah. So if you look at gold holding this level so well, and then we say, okay, let's say it holds this 2280. It holds 2280, and then it gets above that 2400. We get a close above 2420. That's a sign that gold could move higher. And once again, it's what we do here, and I think Kevin does this just about better than most people that I know, is weighing out what could happen in the future. And so as we're weighing these things out and going, okay, this is what could happen in the future. This is why we're watching these levels. This is what this big range would mean. This is what a breakout would mean. What we're giving you guys here is a roadmap. And so as you use this roadmap to kind of break down into your own trading, you can then figure out like what type of trade you're going to trade going forward. If we break out, maybe you're a trend trader. Maybe you're trading that breakout zone, that trend. You know, what if it ranges all the way down? Like I would think that the best trade for a range trader going forward would be we hit that 2100 level and buying like around that zone, you know, like, so there's a bunch of different ways to kind of look at it. Even if we, let's say we break down here, we close below that 2300, we get a close below there. Maybe you short all the way down to 2100. There's a bunch of different ways to look at it. So when we're talking, I had somebody send me a comment the other day, which was, you know, you guys bring up a bunch of different ideas. It's like, how exactly would these be tradable? And it's like, they're all tradable. It's just figuring out, Kevin covers the more short-term angle. I cover the more long-term angle, and figuring out where you fit in all of that. Mm-hmm. And Kevin also can cover the long-term angle, and I can cover the short-term angle. So we have a bunch of ideas here, but in the comments, feel free to ask us questions, or, you know, how this fits into your trading, or whatever. You know, we try to shift people to YouTube more so you guys can ask these questions and talk a little bit more, which is nice today. A lot more people are starting to get on there, so that's cool.
Yeah, and kind of like you know, actionable items, kind of what we talked about. So crude, remember 200-week moving average bounces off of that. If you kind of go and look at a longer term, it's hard to be able to break the 200-week for crude, right? And so we kind of talked about that 2 weeks ago when we kind of had this hammer candle, and I was like, hey, what's the probability that you could have for an upside rebound compared to a downside move? It's going to be very difficult if you bought at that 200-week. kind of sold it, tried to scalp a buck, that would have been a profitable trade last week, right? Now we're hitting the 20-week moving average. Let's see if we actually range back down to the downside here, or if we do see a sustainable pop. It would be a very, if we did see a very sharp reversal off that 200-week, that would be out of the ordinary for crude too, right? We usually don't see this sharp boom, we touch it, and then we're just off to the races to the upside. So I would just kind of like look at it and say, hey, this might range bound out until it tries to find its footing here. But that would be an actionable item. I talked about heating oil. I mean, heating oil is the most sold out of all of the products that you have out there. And you never want to call bottoms, but I just kind of talks about too, production for distillates in itself is starting to slow down, right? We're still seeing buildups, but they're starting to slow down, and a lot of the attention has been put on gasoline. So what could be your tailwind, right? The one that's getting neglected the most is usually the one that has the better fundamentals in order for an upside move, at least a short-term bounce in that trade over 2 weeks or so, right? That's another actionable item. Last week we talked about natural gas. I felt like, and I still believe that it's a little bit, we moved a little bit too far too fast, but it's a hard trade right now. It's a hard
just
trade
real
right
quick,
now.
I just want to
Yeah.
sorry to cut you off, but this is the crude oil chart. That's I zoomed in, so I know the chart doesn't look perfect, but this is the hammer candle that came in that Kevin was talking about, and now we see this reversal. It's not just there was a daily hammer candle that was a little bit better than this, but this is a reversal. That's a 200-week moving average. Like, these are the things we continue to talk about. So I just wanted to add that, Kevin.
Yeah, right. Stars aligning, right? The only thing that's not aligning right now for energy is just the fundamentals. I mean, as soon as the fundamentals show a significant draw, as soon as you see a decent draw when it comes to crude oil inventories, low inventory levels in Cushing, exports going up, or imports leveling out. Now, last week, just be mindful, our buildup was mostly imports that we were bringing in, right? Once you start seeing 2 weeks of that data, it's all to the races to the upside. But we just don't have that yet. And so we have to wait. People can trade technicals and they do a really good job. People trade fundamentals and they do a really good job. Me, I like both. I like a technical setup where I see a hammer candle like that on some very strong volume, hitting a key area of support at the 200-week moving average. And I want to see also the fundamental data to show the same thing. That gives me confidence. That allows me to sleep well at night. Let me go to natural gas. Natural gas, nice little run up. There's weather premium being built into that. There's LNG demand that's going up through the roof. If you're looking at the Asia Pacific markets, they're bidding away the transports of the LNG going to Europe. Europe slowing down the refill process. Their prices are starting to spike to the upside here, but I felt like natural gas moved a little bit too fast. I believe that we do see a pullback down to 250. I'm looking at 250 as an area for us to hit in the next 2 weeks. Just looking at the technical indicators, just knowing that we had some soft EIA data last week. Natural gas, another area I'm looking at. Grains, the grains would be the last one that I'm. Look, we had a great run. We're not going to toot our own horns here, but we did call bottom. It just didn't break out like we wanted to. The weather conditions are better. We're 90, dude, we're like 95%, 93, 95%, if I'm not mistaken, through planting season right now. So seeds are in the ground. Corn couldn't break that significant downtrend that we've seen over the last, 2 years, 2.5 years. Seeing some resistance there, not surprising. Starting to see a cross on that stochastics, like I talked about. I'm a very big fan of that. You can see the cross at the bottom and how that actually did see a reaction to the top. It's vice versa, short-term trade, hitting some resistance here. Will we have, out of the grains, I'm kind of shifting it from wheat to corn. Corn probably has like the best outlook, right? And that's because global supply itself is going to be fairly tight. So the United States farmer is going to be carrying the weight here. If we have a really good harvest, I think that's going to abate some of those fears when you're looking at the global production side of the global inventories. But any hiccup is going to push corn to the upside here. But we just haven't been able to break that trend. Maybe a small pullback to that white trend line. Wheat, same thing, pulling back. Soybeans, for sure, pulling back. In the soybean, the WASD report showed production in soybeans higher than what the market expected. Global inventory is higher than the market expected. USDA did revise down the production from Argentina and Brazil, but not in a really aggressive fashion. So I would say grains are probably short-term bearish right now. So we get in a weather event, short-term bearish on grains, feeder cattle, live cattle, hogs, short-term bullish. We looked at the weights for cattle last week, but I feel like there's still something there, in my opinion, as far as an upside mover. The sustainability of prices, and we have seasonal demand to also kind of keep in mind as well. You're kind of looking at that resistance level. That is a really decent chart. Like, we should probably see a breakdown, but what I like about this chart, and I had one similar to this, is that we actually retested that area of resistance last week as an area of support and bounced off, and we're bouncing off, I believe, today, if I'm not mistaken. Last time I checked,
Yes,
about
we
an hour
are.
ago.
Yeah.
Okay, so old support now or old resistance now becomes support, and if that is going to be the case, and you kind of take that range and you extrapolate that out, you could see, relative highs, or trying to test those relative highs on lean hogs. Once again, seasonality is looking favorable in the summer.
Yeah, no, I agree, and that's selfish of me too, because I wondered what your thoughts was on lean hogs. We had a great trade in it for a while. It's been out for a little bit. Now it's kind of coming back. Let's see where this exactly ends up. But I'm pretty bullish on the meat still. I think there's a lot of catalysts kind of sitting there under the hood, especially getting into these summer months. It could be very interesting. So keep paying attention to it, guys. Thanks, Kevin, for coming on, going over everything. We really hammered a lot of good topics. And please write us, ask us questions. Feel free to say whatever you guys want. We'll cover just about anything. Also, going forward, I'd like you guys to just ask, like, hey, what do you guys think of this? What do you guys think of this commodity? We cover the whole complex. So whatever you guys want, we could bring up charts. We could go over the fundamentals, whatever you guys want to do. So, Kevin, thanks for coming on, man. This was great. As always, and everybody else, we'll see you next week. We also have a show on Friday at 11 a.m. as well, the Market Report.